very happy to be here. My name is Evangelos Gazis. I'm the head of Southeast Europe at Aurora Energy Research, which I hope you would know is a leading provider of energy market analytics, software, and advisory services. And we will be discussing today, we'll be setting the scene for offtake markets across Europe, of course, with a focus on Southeast European markets and Bulgaria. And I'm joined by a very excellent panel with Daniel Dung, Director for Business Development, SolarPower Europe. We have Andrej Stancik, Senior Policy Advisor at Energy Traders Europe. Liesbeth Switten, from Secretary General Association of Issuing Bodies, AIB. And Viktoriya Kerelska, Head of Advocacy and Messaging at WindEurope. So before we jump into the discussion, I have some slides, and I would like to provide some key trends, but also a look into the future, an outlook of offtake markets across Europe, but as I said, focusing on Southeast Europe. So when we talk about offtake markets, we think of three different types of offtake, really. If we move on, I don't know if I have a clicker, but to the next slide. We will see what are the characteristics of these three main, these three main types of offtake. So firstly, traditionally, we were talking about subsidies. So renewable subsidy schemes like feed-in tariffs or contracts for difference more recently. And these have been secure long-term ways of taking electricity 15 to 20 years that would reduce the risk of development quite a lot, but also secure financing and possibly grid connections. So this has been the way that most of the renewables that are in place now were supported. And we still see certain schemes in Greece, in Romania. Bulgaria also established a new scheme to support renewables over the next few years. But we have been moving towards more merchant projects. And this can either be purely fully merchant projects where assets go directly to the market, try to get the financing for those merchant assets, merchant revenues, which is quite tricky. Financial institutions are reluctant often to provide this financing. But also it's trickier when it comes to grid access. However, potential revenues when you go merchant are much higher because you might get the upside from the markets. And then there is something in between, PPA markets, where you do have some of the upsides from merchant revenues, and you can probably secure higher levels of contracted revenues compared to CFDs, where there is a lot of competition. There is still some risk, especially when it comes to financing and when it comes to grid access. But across all offtake options, there are certain fundamentals that affect how things will evolve over time. And when I talk about the fundamentals, I usually refer to gas prices, carbon prices, which based on the market design that we're operating now is still very relevant. So I always want to provide this long-term view on gas and carbon prices. And what we see is, there has been a lot of volatility, especially over the last 2 or 3 years. However, going forward, we do expect that prices will increase over the next couple of years as markets rebalance and demand for gas grows across Europe until 2027. And then there is going to be a downward trend for gas prices. And that is to do with the fact that more LNG becomes available across Europe and demand drops, industrial demand, and shifts to decarbonized options. Longer term, we do expect a slight growth in gas prices, which is to do with the fact that globalized markets, especially in the East, will mean more demand for gas. Similarly, carbon prices will have a surge over the next few years, but the increase in prices will slow down as we decarbonize, demand drops for carbon-intensive fuels will decrease, and that will mean a slower increase in carbon prices. And that translates directly to prices in the power markets. So the orange line here is what we call the baseload price, the average price in the market. This is the example of Romania, but the picture is very similar across the region. And what we see is, early on, there is the trend following the gas and carbon prices with a surge in prices over the next 2 or 3 years, and then a slight drop. But longer term, what we see is that prices do not follow the upward trend reflecting gas and carbon. And that is mainly because more and more renewables get online, pushing certain conventional technologies out of merit and setting the price more often. So we see a dropping trend over time. What is more interesting maybe for this audience is what happens with the blue and green lines, which is the capture prices for wind and solar respectively. And for wind, we do see some discount to base load, which is to do with some certain level of cannibalization. But for solar, which is the green one, is much more pronounced. And we do see a discount to base load for capture prices of solar that is going up to 40, maybe 50%, especially in Bulgaria and Greece. Similarly, there is a trend for the spread, the daily price spread. And that is the difference between the highest and the lowest point in a day. And what we see is an increasing volatility over the next few years. That is to do with more demand, not enough flexibility in the system, more renewables. And over time, we see a drop. And that is to do with exactly the opposite trend, more flexibility in the system. Of course, there is more renewables, but the pace of flexibility, storage assets, demand side, electric vehicles mitigates the impact of more renewables in the system, which means less volatility in daily spreads. But again, quite high, which means that there is a high opportunity for batteries. Finally, one more important metric is imbalance costs. Especially in this part of Europe, in Southeast Europe, imbalance costs have been historically much higher compared to the rest of Europe, very high because of small markets and the fact that, high dependency on gas assets. We do see in the future balancing costs dropping quite a lot, and that is to do with how markets evolve, participation in different balancing markets of different assets, and also certain technological improvements. So this is one of the key trends and a very important consideration in the context of development, project development, but also PPA offtake. So this has been the context from my side, and I know, Daniel, you have also some context on the trends from what has happened over the last couple of years in the PPA market. So I would like to start with that. Would you like to present some trends for PPAs?
Indeed. Thank you, Evangelos, for this very insightful presentation. I want to take a moment, actually, first of all, to congratulate the whole team of APSTE for organizing this great conference, I think 3rd year in a row, and bringing all these stakeholders together, because I do believe that they make a difference in the local but also regional market. We're very glad with what they're doing here. When it comes to key trends, I want to focus on one number, and I hope that it will stay with you as a key highlight from this year's event, and that's 10.4. Because 10.4 were the gigawatts installed, the gigawatts signed in through corporate PPAs in 2023, and that's compared to 6.7 in 2022 and 7.7 in 2021. So this has been a record-breaking year for corporate PPAs across Europe, and that's a very, very strong signal that we want to send. When it comes to technologies, ICT, telecoms, but also heavy industry are the leaders in terms of signing corporate PPAs. Interestingly, in terms of capacity, ICT is outperforming heavy industry, but in terms of number of deals, interestingly, heavy industry is actually signing more deals than even ICT, which is very interesting to mention. Other segments that are performing very well include telecoms, transport, and retail, and we see growth across all these sectors. In terms of geographies, of course, the usual suspects such as Spain, Germany, some countries from the Nordics such as Sweden, Norway are really taking the lead. But also we see some movements in the UK and France. When it comes to types of corporate PPAs, we do see that the traditional corporate PPA models are dominating the deals that we see on the market. But what's interesting that we also see in 2023 is that corporates are exploring other innovative models that include multi-buyer PPAs, that include PPAs for renewable hydrogen, that even include PPAs combined with storage, which is very interesting to, again, observe in 2023 already. Now, obviously, representing the solar industry, I do have to have a shout out for the solar industry as well, because we've outperformed in 2023. We doubled the annual capacity signed when it comes to solar PPAs across Europe last year, right? We're talking about 13.2 gigawatts cumulative capacity signed for solar, which is 6 gigawatt extra year over year compared to 2022, which is excellent result for solar PPAs. At the same time, I mean, it's not just shiny days and rainbows and good days. In fact, there are some challenges. Some of the challenges are very obvious, such as permitting, grid connection, but I think it's very important also to already mention the big elephant in the room. And this is obviously the negative or close to zero prices, and I'm sure Evangelos and the rest of the panelists will be discussing in more details. Last but not least, to finish the initial statement on a positive note, the market design reform really put corporate PPAs in its center. In fact, there are very positive elements that we see in the market design reform that we believe can stimulate even further the offtake of corporate PPAs. Some elements to mention include guarantee schemes for mitigating offtake payment default risks, or allowing large companies to share basically energy between each other, but also CFD and PPAs combined contracts being permitted. And last but not least, no retroactive effect for existing PPAs.
Many thanks, Daniel. That was very, very useful. Andrej, you represent the traders in this panel. So would you like also to provide a view on what has happened recently, any key trends?
Благодаря. Thank you. I'm very happy to be here in Sofia. My name is Andrej Stancik. I represent Energy Traders Europe. We have over 160 members who trade in power, gas, and energy certificates all around Europe. I'm very happy to see some of our members here. So if after the panel, please stop by and have a chat. If you are not a member, don't worry. Please stop by. You can become one and we can have a chat. Last time I was in Sofia, this is actually my third time in Sofia. I was there as a state secretary in the Ministry of Foreign and European Affairs of Slovakia. It was the height of energy crisis in 2022. And we, as politicians, we were discussing how to solve the crisis, how to solve the market distortions, how to repair the market. You know what they say, that if you have only hammer in the hand, then every problem looks like a nail. So we tried to solve the crisis of market by political interventions. But if you look at back, it's not market failure. It was actually policy failure, because the market, the spikes in prices because of gas were caused by political decision of one tyrant in the Kremlin to wage a war on his neighbor and to starve Europe out of gas. The market responded well according to design, according to price signals, and market solved the crisis. So let's not talk about market failures, let's talk about policy failures. And if anything, market showed that it's robust and flexible, because in 3 years we had more crises than Europe has seen in 100 years together. So that brings me back to the outlook for PPAs. If we talk about PPA, what is a PPA? It's essentially agreement between two sides willing to take risks. Usually it's for a long time period, and I'm very happy to see numbers growing up. I'm very happy to see that PPAs are becoming more and more popular, because that's the best and most market-efficient way to stabilize prices, to GEOs. This seems to be like a Russian hybrid action against my microphone. So the most, sorry. So it's the most market-efficient way to stabilize the prices for producers and for consumers, to get your GEOs, and also to get finances for new renewable sources. But if we want more PPAs, we need to go back to the basis. And the basis is the confidence in the market. We need more liquidity. We need more stability. We need clear legal and political framework. Because if you're going to have ad hoc, short political interventions, you know, the politicians with a hammer trying to hit a nail, you're going to have less stability, and you're going to have market participants less willing to take these risks. So if I have one message for this panel, it will be, let's use the potential of market, let's use all the tools market has, and deliver on the results we have in green transition to stabilize prices and to provide more options for producers and consumers to deliver them more affordable prices. And for this, we need clear, transparent, and stable regulatory framework.
Thanks. Thank you, Andrej. Very good messaging. Yeah, GOs were mentioned a couple of times. Liesbeth, I would like to pass on to you. And yeah, if you could also provide a view on what has happened, but also provide an introduction to your organization. Let us know what you do apart
thanks,
from GOs.
Evangelos. So I'm Liesbeth, Secretary General of AIB. For those who don't know, AIB, Association of Issuing Bodies, we are the non-profit organization whereby all the European member states and countries of Europe are jointly harmonizing the system of guarantees of origin that is laid down in Article 19 of the Renewables Directive. When I was speaking at Resource my first time in 2018, nobody, or I think 1/3 of the audience only understood what it was a GO. Obviously, this has changed dramatically. So the GO is the digital certificate representing 1 MWh of renewable electricity that's produced, and the attributes of that unit of energy are in that certificate. So the GO is the only legal instrument that you can use to prove the consumption of renewable electricity. Within AIB, as said, we're not a European agency, we're a non-profit organization harmonizing bottom-up with 37 members. Our members have all been appointed by their government to administer in their country a system of guarantees of origin. Our scope, our geographic scope is EU, the EFTA countries, but also the contracting parties of the energy community, meaning all the countries up to the Russian border. Together, we have elaborated a standard for the guarantees of origin in order to make this instrument transferable internationally. This standard is called the EEC standard, and we operate an IT platform that connects all the national registries. It's called our hub. We have a standard for electricity guarantees of origin. The system has been in place for 20 years there. And recently also the system for gases, for guarantees of origin, for biomethane, for hydrogen, has kicked off. In terms of trends of the GOs and PPOs, we can solidly say that the success of GOs is really on the rise. And if the Ukrainian war has really sparked that as well, we really saw that at that point when Europe was looking to become independent and to have this energy security, that obviously there was a push for more renewables, and also that needs a proof of that renewable power. And if I can say one figure, it's 1,000. 1,000 terawatt-hours of renewable electricity has last year been issued with guarantees of origin. That's a rise of 15%. And if I look at this year's figures, only in Q1 we already are at 314 terawatt-hours. Of this batch, the majority is traded internationally, within Europe that is. And we observe an increasing demand for GOs. So indeed, PPAs are on the rise. It's a great thing that we now have really large corporates involved in developing this renewable production capacity within Europe. And but also we've seen, obviously, with the Green Deal, a push and thus an increasing demand for GOs from policy, from regulation. There's the CSRD, the Green Claims Directive, which will become into place. So that is also sparking that demand for GOs. We've also seen a much increased supply of GOs, and it was mentioned already that had an impact on the price. the geo market is a non-regulated market, and there is a high volatility of prices. And I am aware of the difficulties this causes for PPA negotiators to put in a price for the geos in the contract, especially on the long term. Last year, we saw an increasing supply due to Brexit. The UK is no longer recognizing European geos within the UK. We have had, more and more production devices are coming out of support systems and thus are awarded with geos. And on the other hand, more and more countries are introducing an auction system for supported electricity, whereby in the past this production was not awarded geos, and now these geos are auctioned off. In terms of the connection between geos and PPAs, last year we saw the RED III being voted, so a new version of the Renewables Directive, whereby for the first time a real connection is made between PPAs and geos, saying that if you sign a PPA, then at least you should be awarded the geos to it. What we see is that nowadays in most PPAs, the guarantee of origin is included together with the sale of power. EFET has done a great deal on that as well with their standard agreements over the past years. And we've also seen a creation of new markets of geos. In terms of challenges, and I'm going to round up, there are quite some challenges as well with the growth of the market of PPAs, with the growth of the geo market. There's also the growth of interfering legislations that can cause a threat to other types of green, and by installing other types of green claims, whereby the essence of a guarantee of origin is really making sure that there's no double counting of the same unit of energy. So this is really the mission of AIB, and this is what we fight for very hard. Yeah, there's obviously, as a challenge, the complexity of it all. It takes quite a lot of efforts to stay informed, to understand the whole system and its complexities. And then finally, there's obviously the challenge of mutual recognition of geos, in which case Bulgaria is obviously affected. Bulgaria is not yet a full member of AIB. They've joined as a member recently. We have been in talks with Bulgaria for over 7 years, and the efforts of the issuing body are really great, but the political instability has caused it impossible to kick off the system and join AIB in full. Now, luckily, we see that there is legislation in place. The residual mix methodology is being drafted. On the 2nd of May, a new ordinance entered into force, accommodating IBEX to set up the market of geos, including some auction systems. So from a legislative regulatory perspective, everything is in place. In terms of joining AIB as a full member, there are two parts. There's the regulatory, the document part. This is well on track. And then there is the IT part, meaning that the registry, the national Bulgarian registry, has IT-wise has to be compliant with our EEC standard, and we have to establish that connection. This is work in progress, and it can take up some time also due to the constraints of public procurement. On the other hand, there are other countries that haven't joined. There's Poland, we're in talks. Hopefully they will join soon. Romania, looking grim, not much moving there. And then there's the countries of the energy community, Serbia, Georgia. Serbia is a full member. Georgia is becoming a member. Montenegro also in applying. And then Kosovo, Ukraine, Albania, Bosnia-Herzegovina, North Macedonia, all on their way. But there's a big but. The geos from those countries are not accepted for disclosure in the rest of Europe under the Renewables Directive. There is a roadmap under elaboration with the European Commission to make sure that we will get mutual recognition. However, this will take time. We are in close dialogue with the Commission on this, and hopefully we will see this kicking off as well.
Perfect. Many thanks. We will be touching on some of those points, especially on the mutual agreements across different countries. But before that, maybe Viktoriya, if you would like also to introduce your organization and also what has been the main trends in the wind energy sector.
Thank you, Evangelos, and good afternoon to everyone. It's really a pleasure being here with you. So my name, Viktoriya from WindEurope, which is basically the trade association representing the entire value chain of wind in Europe. More than 500 companies are our members and basically represent everybody from the manufacturers of wind turbines to the developers to the national associations and research institutes. I don't want to repeat what was said previously by my colleagues. For me, there are probably two major trends that have been happening on corporate power purchase agreements over the past years, and I will tackle more the policy aspect of it. The first trend for me has been about the realization across the board, be it because of what is happening in Ukraine, that the scale of the challenge of how we deploy renewables is really extraordinary. We need to fast forward this deployment in renewables, both in wind and also in solar. This has been very, very pronounced. And therefore, we need all types of mechanisms that can support the developers to have the right incentives to deploy the volumes that we need. Corporate power purchase agreements, in this sense, has a major role to play, together, for instance, with contracts for difference or merchant projects as well. Second key trend for me has been the huge transition that we have done in our policy thinking. Matthew from the European Commission said it in his introductory video at the beginning. But basically, again, in 2018, we didn't even have a definition of what a corporate power purchase agreement is in European legislation. We are now in 2024. We have a record-breaking year for PPAs. And now we are not only discussing how to even further cut down the administrative hurdles, the grid hurdles to corporate power purchase agreements. We are even discussing how to start combining different models so that we can get this deployment. And this is what was written last year in the revised market design framework in the European Union and is now supposed to be implemented also at national level. I think this is very important as well. And third thing, on my way to this event today, I did a very quick calculation and I think I counted for Greece, Bulgaria, and Romania combined. Since the beginning of 2022, we had approximately 800 megawatts of corporate power purchase agreements with renewables, solar and wind. I think this is a great result. I'm sure we can do more, and I'm very sorry that there are no politicians who can hear today here in the room that we need both more wind and more solar in our country as well here in Bulgaria. On the challenges, Daniel mentioned some of them. I don't want to repeat, but it's basically a lot of things. We have had a major revamp of European legislation around market design, around renewables. So now we need to consolidate and start implementing it as fast as we can. I think this is the first challenge. And this concerns permitting, it concerns support mechanisms. The challenge future for us, and especially after the European elections, would also be how do we set the new legislation, the new agenda of the European Commission. And for me, there the biggest challenge would be what we do with the grids. I will keep it at that.
Certainly. And talking about grids and challenges more generally, one of the questions that we have been receiving quite a lot lately is around curtailment, very low prices, negative prices. So, Daniel, how do you see that? Like, how big of an issue has this been for developers? And how do you see the future? And are there any mitigating factors when it comes to negative prices?
I think the first thing that we should think about is what is the signal that negative for close to zero prices are sending, right? I mean, the way we define it, and also across the work with over 350 members that we represent in SolarPower Europe across the entire solar value chain, is that the signal is that there is risk for remuneration, there is risk for revenue. And when there is such a signal for project developers, this is creating then a consequent uncertainty in investors, financial institutions, and others. And then that is obviously then translated into uncertainty within corporate buyers themselves, right? Who really want to sign corporate PPAs. Now, there are multiple reasons for negative or close to zero prices that are happening across Europe. And I think I'd like to focus for a second on the Finnish case or the Finland case, right? On one hand, what we see is obviously high curtailment, but also a slow ramp down of the new nuclear plant that they have. And at the same time, lack of flexibility in the generation assets that they have. It is obviously impossible to be ignorant about the link between renewables and negative prices as well, especially with this high level of penetration in certain markets such as Germany, Netherlands, and some of the Nordics. But it is also very important to think systematically about negative prices, right? Short term, we do expect, especially in the summer, this phenomenon to continue and probably even intensify, right? So potentially bad news in the summer. But systematically thinking about it, we're looking at lower electricity demand, but high productivity of solar assets, right? This leads to natural imbalance in the system. At the same time, I think it's very important to mention that it really depends on the system itself as well, right? In certain cases, in certain countries, at those months where we see low demand but high productivity of solar, we also sometimes see, and I hope Viktoriya will allow me to say that, a little bit lower productivity of wind and even hydro, right? And this can help with the equilibrium. Let's think about other sectors, such as cooling. In the driest months of the season, I mean, we see peak in cooling demand. This very well can also be matched with, obviously, solar generation that can potentially help with negative prices. Now, let's talk about solutions, right? In SolarPower Europe, as the European Solar Association, we believe that flexibility is a key element that we should be considering, and we should be basically fast-forwarding as much as we can. When we talk about flexibility, we look at the obvious battery storage, right? But also, we believe that the demand-side flexibility can play also a bigger role. And when we say demand-side flexibility, we mean, let's say, using smart electrification of sectors such as heat and transport, and combining this with the renewable energy capacities. Now, other solutions that we look at require, we believe, a lot of work at the DSO level. Now, being based in Brussels, of course, we're talking all the time to the European institutions, right? One of the agencies that we're talking very often is ACER. For some of you, maybe this acronym is familiar, but in short, this is the agency of energy regulators. Now, what we hear from them is, in fact, only 4 member states, and DSOs in those 4 member states, I've written them down, I'm going to name them in a second, actually have market-based redispatching mechanisms or local flexibility markets for redispatching, again, at the distribution level. Only 4. 11 other member states are actually using non-market-based redispatching mechanisms, and all the rest of the member states, unfortunately, TSOs in those member states, are saying, well, we're not taking any congestion management actions. In fact, we are requiring the TSOs to solve some of the congestion problems, and they need to basically take actions to reinforce the grid, which is something that I think we can agree with, but it's not the only solution. So we from SolarPower Europe believe that the work with the DSO from a demand-side flexibility perspective is also absolutely critical and something that we should be paying attention to. Now, I want to go back to energy storage, right? If you look at the volumes in the last couple of years, there's definitely an upward trend, okay? But I very much agree with something that you said. We do need a very comprehensive, stable regulatory framework, and flexibility is not an exception. In fact, what we believe is that for energy storage to be deployed at the pace that matches the deployment of renewables, we need, for example, storage targets. We need to make sure that storage is systematically included in renewable energy auctions. And last but not least, we believe that storage actually should operate in all electricity markets, okay? Now, there are obviously other solutions and other tools, other mechanisms that can be used, I believe, for tackling the problem with negative or close to zero prices. One of those is dynamic pricing. Now, the problem is, unfortunately, that we see dynamic pricing only in certain regions of Europe. In fact, these regions are the Nordics and the UK. But what we want to see is dynamic pricing being introduced and more common in Central, but also Southern Europe, where obviously we see some issues. Now, last but not least, I also want to mention electrolyzers, right? In times of overproduction, we believe that cheap electricity from great renewable energy sources actually can be used for the production of, as we like to call it, renewable hydrogen. And renewable hydrogen, in our view, again, as a solar association, is also critical because there are certain sectors such as shipping or aviation, certain heavy industries that are difficult to electrify, and renewable hydrogen can play a role. And this can be also used in the context of balancing. I think this is also very, very, very important. Last but not least, you mentioned contract for differences and obviously corporate PPAs. Yes, we do believe that using those type of contracts to mitigate the volatility of the prices is also very important, but we believe that we should be thinking systematically about the problem of negative prices and include various solutions together to tackle it. Thank you.
Thank you. And Viktoriya, staying on challenges, another big challenge, especially for assets in this part of Europe, is balancing costs. How do you see that changing over time? Do you agree with Aurora's projection about costs dropping, and what do you see as the main trends when it comes to balancing?
I think when we talk about balancing markets, the key challenges that we see is that at the difference of many countries which are more in Western Europe, here in our region we still have quite a long way to go, especially in terms of how renewables are taken into consideration, whether or not they're allowed to actually participate in such markets. So in other words, the balancing market remains somehow a target that will need to be fulfilled somehow in the future, and I think it's also part to what we have said before, how fast and how quick we can also implement the different regulation that is coming also out of Europe, because as we have heard, in some countries like in mine, Bulgaria, the liberalization of the energy market is still not where it needs to be, for instance, and this is not making things any easier. But if we look across the board of what needs to be done on balancing market, at least from the wind energy perspective, I think what we can say is, first of all, we need to make sure that we have these markets introduced in all the countries. Second of all, we need to make sure that we have pre-qualification criteria or the right pre-qualification rules that allow renewables to be on a level playing field with every other generation that is allowed to participate in this market. This is absolutely critical. And we also need to think a little bit about how do we also design the specificities of the products on the balancing market so that they can also fit the specific characteristics of renewables. So for instance, maybe it's not always important or possible to project the monthly generation that you would have from wind or for solar because of their variability. It's much better if it's done closer to the production time. And this is something that's still in the production phase and the design needs to be happening. So I think this is the first step that need to be undertaken on the balancing market, and probably we would be able to see a little bit better than fitting with wind, at least generation going forward.
Many thanks. Great. On the flip side, I mean, we talked about challenges and costs. Liesbeth, yeah, there's GOs, of course. And what I want to understand, I mean, we talked about GOs in different regions. How do you expect GOs to change in structure over time, especially with hydrogen and electrolyzers? There is an increasing requirement for granular GOs. The timestamps to be much more close to real time. So how do you expect this to change over time?
Yeah, a lot is changing already. Yeah? So first of all, there's going to be a large evolution in terms of having a real integrated European geo market. Once, I think as a first step, we'll have the remaining European countries joining, Bulgaria, Romania, and Poland, the energy community countries. The intention there is to set up a regional geo market that's functional, and that will be a major factor for the Commission to connect that system to the rest of Europe. In terms of granularity, this was the buzzword of 2023, I would say. There's a large demand for more granular geos, 24/7 matching, mainly sparked by the Googles and the Microsofts. Frankly, I see it as a dot on the horizon that we could walk towards. As AIB, we facilitate more granularity. It's also mentioned as a possibility in the Renewables Directive. So member states have the possibility to introduce a concept of more granular GEOs, meaning GEOs with a smaller face value. But personally, I think, yes, we can elaborate this, we can make it happen, but let's first make sure that we have the energy markets up to speed as a whole. Let's make that we first go for a fully functional European geo market. I think that's more important than having this more granularity. To me, granularity is like the icing on a cake that we're still baking, frankly. But nevertheless, we are working towards it. We have a working group in AIB. We will have a workshop on granular geos with our members in 2 weeks. So yes, we are working on that. Then in terms of hydrogen, it was mentioned, indeed, electrolyzers connected to solar devices. It will happen, but it will happen very slowly. Obviously, we are all aware also of the efficiency or the lack thereof. Of the technology that's not yet mature. However, it is happening. This week, Spain has issued the first hydrogen GEOs from converted electricity through an electrolyzer. So in a cooperation of our 2 Spanish issuing bodies, CNMC and Enagas, the first hydrogen GEOs from renewable electricity have been issued on the account of Iberdrola. So yes, it will happen, but there I think that we will need a lot more time. Something else I see as an evolution is obviously, and that's also something that we hear from the market, IT improvements will be needed. It is a hassle to have to register for an account in every national registry. At AIB, we can only do what our members mandate us to do, but we are rebuilding our hub and we are introducing the possibility for more centralized functionalities. It is a pathway, it is a roadmap. We're not going to be there tomorrow, but it is work in progress in any case. And then finally, as the evolution we see on price volatility, we've had a lot of volatility, but from what we see as trends in the market, we hope that prices who are now extremely low will go up, and then there will some kind of a parity with the PPA prices. But obviously, I don't have a glass ball, and don't take my word for it.
Perfect, many thanks. And Andrej, one of the, we touched on PPAs. We haven't touched too much on CFDs. I would like to ask you, how do CFDs affect PPA markets, liquidity, and trading more generally?
That's a timely and good question. Let me just go back to balancing and flexibility question. I think we have a very good solution for balancing, for curtailment and flexibility. That's more cross-border capacity, because it means more flexible options for renewables, less curtailment, and also more options not only for you, but also for consumers. So eventually, in the long term, it will also create more affordable prices. So we should pursue this option because it's the best available option we have. We have seen the numbers, 43 billion euros a year from fully integrated EU electricity market. So I think that's worth exploring. And regarding the CFD, I totally understand the need for stable remuneration for investors. That's on the one hand, but on the other hand, we have to really think cautiously about the market functioning. Because if you have too generous CFD, what's going to happen is that it's going to draw out the liquidity from the market, especially in forward market. So that means less PPAs, less market options, and eventually, if the CFDs are too generous, it's the consumer who is going to pay the bill, because there's no free money, someone has to pay for it, so it's going to be the consumer. And the other problem is short-term dispatch distortions, because depending on the reference price for CFD, there can be inefficient dispatch signals for intraday and balancing. So now, as Energy Trades Europe, we're going to have our position towards the CFD. Clearly, that's the way the state subsidies are going to work. But let us make sure that we design them in a way that on the one hand provides stable remuneration for investors, so more capacity, but on the other hand, would not distort the market and cause problems in the long run, because at the end, someone has to pay for it. And if I have 40 seconds, so let's just use this opportunity to have a message. I think the best solutions are already there. The best solutions are provided by market. Here I'm preaching to the choir, but let us not be ashamed of it. Energy market was not a failure. It showed to be flexible, robust, and stable, and survived the crisis we couldn't even imagine before. So as producers, as traders, as market participants, let us fully use the tools we have on the market. Let us to use our skills, our experience, and deliver on green transition goals, and at the end, deliver the value for the one who is the most important one, and that's the customer. Thank you.
Thank you. I mean, it's a very, very interesting discussion. Unfortunately, we don't have a lot of time. Are there any questions from the audience to the panel? I do have a few questions more, but might be best to open up the discussion.
Very brief questions.
No, please.
So, very interesting discussion, but very quickly, Liesbeth, so we're seeing that in countries like Bulgaria or in general in Southeast Europe, when issuing bodies join AIB, there is an increase in the price of local GOs. So is it something that you see going forward as a trend? And what is your expectation about the price of GOs in terms of, overall commercial viability of renewable projects, especially in the context of lower electricity prices?
Actually, I think you're asking the wrong person. We facilitate the market, but we don't have the price analysis or the price settings. This being said, within Bulgaria, I see the huge potential. There is the developments that are ongoing, a lot of PPAs being signed. So yes, this market has a large potential of growing substantially.
Many thanks. Are there any short questions? Any more questions from the audience? Mariana, I'm not sure.
That's excellent, because I like to be on time with the panels. So I would like to go for your applause to our current speakers who set the stage actually for everything that you will go through for the rest of the event. So big applause to them.
And thanks. Thank you.